All right. Hello and good day to everyone around the world. Thank you for joining this live ACSS web seminar broadcast. In the next 75 minutes, our speakers will discuss bringing in new business while ensuring compliance. Let's launch the presentation.
Can you see it now?
No.
Okay, hold on. Now? Okay.
Perfect. Thank you, Carlos. Again, thanks everyone for joining. In the next 75 minutes, we will discuss the subject, the trade finance equilibrium, bringing in new business while ensuring compliance. This webinar is sponsored by Windward. You will hear more about Windward throughout the presentation. And next slide, please. My name is Alexander Witt with ACSS, and I will cover the introduction of today's webinar. I'll just be taking you through a few housekeeping slides before passing you on to today's speakers. Next slide, please. Firstly, we will just take a moment for a brief sound test. If you cannot hear us, please adjust your speakers in the first instance. And if you still cannot hear us, please either use the instructions you see on the screen or contact us at helpdesk@sanctionsassociation.org. Next slide, please. Just a reminder that for your convenience, this and all our webinars can be joined from a variety of devices, including your computer, your smartphone, or tablet. This can be done by downloading the GoToTraining app from Citrix and typing in the GoToWebinar ID number, which can be found in your confirmation email and is also displayed at the bottom of the control panel. Next slide, please. Your certificate of attendance will be sent to you automatically after the webinar, so there is no need to request it. However, if you do not receive it for any reason, please feel free to email us on helpdesk@sanctionsassociation.org. Next slide, please. Before we start the webinar, let's make sure you are all familiar with the webinar control panel. You should see a control panel on the right side of the screen. If you don't see it, it is minimized. You can click the arrow button to bring it up. Minimize the panel by clicking the same button. The participant guide, which includes speaker bios and a PDF of the presentation, can be downloaded from the pod on the control panel called Handouts. We encourage you to participate in the discussion of the webinar through using the question pod near the bottom of the control panel. We will also ask you some polling questions during the webinar, so stay tuned. Next slide, please. If you don't already know about us, we are the Association of Certified Sanctions Specialists, or ACSS. ACSS is a professional membership body for sanctions professionals worldwide, the only organization that creates a home for sanctions compliance. Next slide, please. The ACSS membership comes with many benefits, including our interactive sanctions map, our sanctions guidance library, ACSS task forces, sanctions training, and monthly Sanctions Connect calls. Also, all of our webinars are available to members on demand, so make sure you visit the website to learn more. Next slide, please. Among other things, ACSS offers the certification as a sanctions specialist or CSS. This is obtained through our rigorous CSS exam, which is meant to extensively test your skills in the key areas of sanctions compliance, implementation, and enforcement. If you pass the exam, you become a CSS or Certified Sanctions Specialists. Next slide, please. Again, welcome everybody to today's webinar. I will now hand over the presentation to today's moderator, From Windward, Gilles Perez.
Thanks very much, Alex. And first and foremost, thank you so much to ACSS for hosting this webinar today. So my name is Gilles Perez. I work at Windward as the product marketing manager. And I'm very excited to be here. It's super exciting to see so many of you attend this webinar today. I think we're going to have some very interesting discussions. We have amazing panelists, and hopefully you'll find this webinar to be of value to you. Now, before we go into that and before I introduce everybody, just want to take a couple minutes to introduce Windward and what we've been doing for the banking industry. So Windward is a leading maritime intelligence company that was founded in 2010 by two naval officers who basically understood that there could be a great impact to technology and understanding behaviors in the process of identifying maritime risks. So they created what is called a predictive intelligence platform, which is powered by Maritime AI, which is to say artificial intelligence that is built by maritime experts. Our first customers were initially from the government sector, and today we have customers from the U.S. Coast Guard and Frontex that are using our platform as part of their core operations. But as our capabilities and our product expanded, so did our market reach, and so we started having customers from all types of various industries. Of course, banking is one of them, and banks are using today the Windward platform to identify compliance risks. Now, that became even more relevant with the recent OFAC advisories that started urging banks to look at maritime risks as part of their compliance operations, and more specifically at deceptive shipping practices. And by calling it that, they basically just gave a name to the types of risks and behaviors that Windward has been monitoring and identifying for about a decade prior to that. And if you've looked at deceptive ship or the OFAC advisory and what deceptive shipping practices are exactly, I'm sure you can imagine that in order to build a solution that can identify such complex behaviors, especially in a terrain that is so complicated as the ocean, you really got to live and breathe the ocean. Now, I remember when I told my 4-year-old, what I do, trying to kind of impress him, I told him that I work in a company that helps find the bad guys in the ocean so that the superheroes can catch them. And he got all excited about this. And then when I brought him to the office a few days later, showing him around a little bit, he asked to see what a bad guy vessel looks like, or he called it a boat, obviously. So I showed him a couple pictures, and he was underwhelmed, to say the least. He was a bit disappointed that it wasn't a big boat with a black sail and a white skull on it, which, by the way, would have been a lot cooler and would have made a lot of people's job much easier. But as you probably know, this is not what a bad guy looks like in the ocean, and it's a lot more difficult to identify those. A lot of times you got to look at very complex ownership structures to link a non-maritime entity to a high-risk vessel. And that's the reason why we look at all 7 levels of ownership up to the UBO. That's also why we don't use a rule-based engine, because we know how many false positives those can get you. And most importantly, that's why we made our platform so easy to use and our insights so simple to understand, because we basically want anybody who's using the Windward platform to be able to identify and detect and investigate maritime risks. On the next slide, I just want to share with you something that I'm very proud of. I think it's actually the previous slide, but last month, that was the previous slide, but basically last month, Windward was IPO'd and was listed on the London Stock Exchange, something that we're all very proud of, and we definitely plan to continue to be the leaders of our market in 2022 and of course way beyond that. Now, next slide. I'd love to introduce our panel of experts. We have quite an amazing panel today, and I'm very excited to be able to discuss with them the role of AI in trade finance. We're also going to cover the effects of the new guidances and what they mean to banks. And we're also going to cover some innovative approaches to streamline the collaboration between first line and second line. So first introduction of our panel, I'd like to start with Una van den Berg, who's the founder and CEO at VRS. Hi, Una, it's great to have you with us. Can you tell us a little bit about yourself and VRS?
Absolutely, and I'll keep it short and sweet. Anything you need to know, you can find out on LinkedIn. Giles, the guys, everybody, it's absolutely a pleasure to be here today. As Giles mentioned, I am the founder and managing director of Virtual Risk Solutions, which is a global consultancy firm that provides support and implementation of governance, risk, and compliance frameworks, in particular AML frameworks, including sanctions advisory. And prior to that, I was the APAC head of AML and compliance internal audit at Citibank. And throughout my career, I have dealt with the build of numerous AML and regulatory compliance frameworks. So I think what I bring to the table today is the real challenge in-house of not just building a sustainable solution, but the challenges in application in terms of the products and the typologies and the risks that present themselves both geographically in our customer space and through our products.
Excellent. Thank you so much, Una. Great to have you with us. Next, we have Eric Orsini, who is leading the OFAC sanctions and compliance operations at SocGen. Hey, Eric, great to have you with us today. Can you tell us a little bit about yourself and what you do at SocGen?
Yeah, sure. So thanks, Jill. Thank you to ACSS for having me today. As Jill mentioned, I work at Société Générale, a French bank. And as you guys know, it is a global financial institution. Here in the US, I work on the sanctions investigations team with a heavy emphasis on trade finance and maritime risk. Before my time at SocGen, I spent some time at JP Chase in the consumer bank, dealing with high net worth, high profile clients. And then after that at Capital One Bank, doing business banking, dealing with clients of annual revenues of up to $10 million. So being in the front of the house at JP and then at Capital One, and now being at SocGen, being a sanctions expert, I think I'm uniquely positioned to speak, on the frictions between the first level and the second level when it comes to, managing compliance and bringing in new business.
For sure, and it's a great pleasure to have you with us. Thank you, Eric.
Of course.
Last but definitely not least, my colleague, esteemed colleague, I should say, Tim Aquino, Windward's very own compliance solutions expert. Hey, Tim, can you tell us a little bit about yourself, your background, and what you do at Windward?
Sure. So originally I got my start working in the public sector for the government with national security. I was a consultant for irregular warfare and identity intelligence. I then switched over to the private sector at JP Morgan, leading their quality assurance team for their global due diligence program. And then, as you had mentioned, the OFAC advisor in May 2020, which put an emphasis on the maritime domain. I decided to jump on board with Windward to help bring some of that that expertise on combining the intelligence aspect, the government aspect, and the business efficiency aspect of the public sector and private sector with our prospects and clients and at Windward. So it's great. I get to bring to bear a lot of my background and apply a lot of it. I'm fascinated by the technology, and that's what makes it a lot of fun.
Excellent. Thank you very much, Tim. We're going to kick this off with actually a question to the audience. So you can warm up a little bit, but it's going to be a very easy question, so don't worry. But I do want to remind everybody to please, throughout the webinar, don't wait for the end. Just type in your questions, in the chat box so that we can try to address at least some of them by the end of this session. So the first question for the audience is, as I said, pretty easy. What best describes the role of the team that you belong to? Is it first line of defense, second line of defense, third line of defense, or none of the above? It's just you can start answering. I think we can put the poll up now and have everybody answer.
I think the poll was close.
Just going to give everybody a minute
Too fast. Maybe we can.
That's what you were
Sorry, it looks like I'll share the results. The poll closed automatically, but some people voted.
Okay.
All right. So it seems like the first ones to vote were mostly second line of defense. So it's pretty cool. I'm sure there were more from different teams, but anyways, we'll take this as a a way to kind of get an assessment of who's with us. So we can, thanks everybody for obviously for being here, and hopefully we can get a discussion going a little bit later. If we can go back to the slides, just want to start with our first question to the panel. All right. So next slide is going to show the first question to the panel, and basically it's gonna be for you, Eric. If you can share with us what is the structure of the compliance department at Société Générale.
Sure. So again, as I mentioned earlier, we are a global financial institution, and we are headquartered in Paris. So the group office or the head office is located there. And then on the U.S. side, we're structured similarly, probably to most banks our size. We have our local sanctions compliance department. We have our ABC department, anti-bribery corruption, TMG transaction monitoring, and our anti-money laundering function as well. And we all work collaboratively to align our approach with sanctions compliance. Speaking a little bit more about the sanctions team, we have a wide team that has different functions. So we have a team of investigators that are interdicting live payment transactions, that are reviewing trade finance deals and conducting the enhanced maritime due diligence that we're going to be speaking about today. We have an advisory function that works with KYC and conducts client due diligence. We have a governance function that works with our internal auditors and external regulators, and as well as with our policies and procedures. And then we have a function for our list management, who manages our internal lists, our external lists, and conducts our sanctions tuning to get our alert hit exactly where we want it. So that is the structure of the compliance department. And then we also have a operations team which pseudo flows up into compliance, especially in the sanctions space.
Excellent. Thank you, Eric. Now, Una, same question to you. You work with a lot of banks. You offer a lot of advisories or consultancies to banks. Can you tell us a little bit what the typical structure is of the compliance department at banks that you work with?
Absolutely, and to be honest, the first answer is it really depends on the size of the organization and also the structures. As Eric mentioned, Société Générale is headquartered in France, and they would have their main team in Paris. What's interesting with some other banks, for example, strategically, if you take Bank of Tokyo Mitsubishi or MUFG Group, about 5 years ago, they offshored their central financial crime team to the US, which was the first time we had seen that happen in a Japanese bank, where a key function was offshored to a non-Japanese location. So it really depends both that the risks that the organization are facing and also where the technical expertise sits. From some of the banks have offshored the review of sanction alerts to centralized hubs in the likes of the Philippines, Malaysia, India, whereas, as Eric rightly pointed out, other banks, and including those banks that have offshore, do have onshore technical expertise to advise on specific sanction regimes. Obviously, one of the most challenging is OFAC, and the extraterritorial impact that has in terms of the US nexus. And a lot of organizations are quite conscious about that in terms of they're structuring their organizations so that doesn't occur. Obviously, as well, with the geopolitical situation between China and the US, there have been instances where certain carve-outs have had to happen in certain organizations to prevent extraterritorial impact of those issues. So it really depends. A small organization would be a one-man band, probably doing it all. In larger organizations, it will be more sophisticated in that they're not so much on the technical expertise side, because I'm sure the individuals are as competent in the smaller organizations, but they will have structures that reflect their appetite for risk and also their key focus areas and skill set needs.
Excellent, very interesting. So next slide, please. We have a question for Tim. We mentioned the OFAC advisory and the new guidances that they put out a couple of years ago. And so can you tell us a little bit about what types of risks originating in the ocean are of interest to banks, and what basically deceptive shipping practices are?
Yeah, for sure. So May 14, 2020, OFAC puts out this advisory, and they've put out advisories in the past around specific regimes or trends that they've noticed, but they've been somewhere between like 3 to 8 pages. This advisory was over 30 pages and was directed to maritime organizations generally, but actually called out banks specifically, which was the first time they said, hey, I need financial institutions to do X, Y, and Z. And so what's the X, Y, and Z? The X, Y, and Z is screen for behaviors beyond just going on the OFAC website and seeing whether or not you're interacting with someone on their list. The reason they do that is because if governments have a challenging time policing up, the high seas, so it's easier to put that focus on transnational organizations and financial institutions and say, I'm going to punish you unless you monitor your clients to make sure that they don't do these things. And so it's put a lot of burden on ship owners, energy traders, but now specifically financial institutions to monitor whether or not the vessels that they come across during their usual business activities, but specifically trade finance, whether they're conducting, let's say, ship-to-ship transfers that are illicit, or dark activity, turning off their AIS deliberately, which is different than a signal loss event. I mean, imagine turning off your cell phone versus dropping coverage while you're passing through a certain road. There's a difference between the two. But it put a lot of burden to look for things like, let's say, loitering or port calls. Port calls is somewhat easy. You can look to see whether or not they called port in Iran or in Venezuela. That's simple enough. But when they try to deceive it with a new typology now called GPS spoofing or GNS manipulation, it becomes very sophisticated, and you realize quickly that when you start to take on this challenge of deceptive shipping practices, you're really entering an arms race against very sophisticated actors who have large payouts at the end of the day when they're successful.
Thank you very much, Tim. So next slide, please. We have a question about that I'm going to direct first to Una about the reaction from compliance teams, right? So obviously, as Tim explained, these are different types of guidances. These are things that banks are not, it's not really in their comfort zone. So how do you see banks reacting to these new guidelines?
I think first and foremost, the immediate reaction is, did we truly understand the risks that were in our books? And that is a struggle that a lot of institutions have grappled with on the back of the OFAC guidance. One of the things that I've been quite conscious of over my career, and I've been doing this for 20 years, is that whilst we operate in a compliance capacity, do we fully understand the product and the nature of the product? And in respect of trade finance, this goes right back to the basics, knowing your client and knowing your client's business. And what these OFAC guidance papers have really shouted out across the organizations has been, we weren't necessarily aware about the risks and the methods of manipulation that were being used. And now that we're being asked to look closely at them, the next question is, well, how do we do that? And I remember back in the day when we used to do screening using, publicly available tools and, Googling on the internet where ships had been. Now we have much more sophisticated technology. And I think the struggle in a lot of organizations is, where do we start? We firstly, I think the president of FATF said it very well last year. Automation and technology is great, but we need good training to start with. People need to understand what it is we're looking for and how that technology is to be used. And in my opinion, that was one of the first warning shots that this paper shot out, was to say, we didn't necessarily understand the real risks in our books or in indeed the product that we were offering.
Yeah, that makes total sense. And hopefully if there's anybody on the call now that felt this way, you can feel some comfort to know that you were not the only one that felt this way. Eric, what was the reaction like at SocGen?
Yeah, sure. So specifically to the 2020 shipping advisory, it wasn't much of a reaction from SocGen because, as Tim mentioned earlier, there has been shipping advisories that have come out, and I believe as early as 2018. So at SocGen, we took a really proactive approach with respect to the shipping industry and the sanctions risk that it presents. And what we did is we looked at the impact that this had on our business. So we took a step back and we said, do these new guidelines impact our business? And one stat that I found to be particularly helpful in understanding the risk is that 90% of global trade involves maritime transport. So if your financial institution, or if your institution, if your business touches and concerns, international commerce, then by default, you're going to have exposure to the shipping industry, and also in turn exposure to potential sanctions. So back to what we did, we really tried to create policies and procedures and our process. We built it out to what we call now enhanced vessel due diligence. So like Tim said, we're not just looking at the vessel name and IMO and saying, is this on a sanctions list? The bad actors and the bad behaviors, that doesn't show up on a sanctions list, right? So we have now integrated AI into our enhanced vessel screening. So not only are we looking at, where the vessel was during our shipment, who are the owners, looking at the complex ownership to see, does the ownership structures identify or indicate possible shell typologies. We're also again using AI and Windward specifically, because SocGen and Windward are now partners, to identify these behavioral risk indicators that we cannot see. So again, we took a very proactive approach, and we have built a robust maritime due diligence process here that has been also using automation to increase efficiency across all business lines, not just transactional due diligence, but also in the trade space.
Thanks very much, Eric. So moving on to the next slide, I have a question for Una. Eric just described the proactive approach that Société Générale SocGen took, with these maritime risks. But at the same time, those advisories, those guidances, they're not yet regulations. They come as recommendations. So is this really how banks are perceiving those, or do they feel kind of obligated because it's coming from OFAC or FSI or regulators? Do they feel more obligated, or do they really see them as recommendations so far?
I think the quick response is, if they're not in compliance, they're going to have a hard job arguing their case if something should happen. And that's going to be a very difficult issue if you're in a defensive position after an event. But however, taking a step back from that, if we look at earlier guidance, OFAC, FATF, we're still struggling with the underlying screening requirements that are imposed, right down to, for example, not just the vessel, but for example, the captain's name and the different handoffs that are happening from a port perspective as well. So, we're in an industry where we are struggling already with the screening requirements because a lot of the documentation is paper-based. The pandemic had a massive impact on compliance's capabilities in this regard. Many institutions were still receiving documents in a paper form. There is a significant amount of automation required in our industry if we're going to get this right. And work has been looked at with the likes of, for example, Singapore did some amazing work back in 2019 across a number of the banks looking at how we could use blockchain technology for this purpose. So, my concern here is the fact that whilst the OFAC advisory didn't introduce anything fundamentally new per se, the challenge is that we're still struggling with underlying screening components. And there was a question here in the chat room about non-financial institutions. We're struggling not just in the shipping sector, but also in metals and petrochemicals as well. So there's a lot of challenges here across the board. But the bottom line is, if you're not in compliance and there is an incident, you're going to put yourself in a very difficult position in terms of enforcement action.
Thank you, Una. So Tim, you talk to a lot of people that are interested, that come to us because they're interested in our solution and what we can do for them. What did you learn from your interactions with banks?
Well, I learned that they're in the defining the risk phase. Many of them, obviously, there's leaders like SocGen out there that have taken a very proactive approach, but a lot of the market is still trying to benchmark what their reaction is going to be. Some of them, as well, Una mentioned that there's promising blockchain technology. A lot of financial institutions are worried about bill of lading fraud, which is something that Maritime AI can detect fraud if you're talking about even a look back, whether or not a vessel did or did not go where it said it's going to go. I mean, it had to transpond. So they're very interested in fraud detection. When they're trying to define their risk, they're trying to map out which companies are connected to vessels. For instance, if you wholesale bank a client that is a ship owner, that's sort of easy to know. But to really map out in trade finance, how many steps away you are from the risk is a little bit harder. And then if you're talking about live transaction monitoring, that gets very difficult. There are new solutions in place like optical character recognition that a lot of banks are employing for these paper documents. And now they're seeking out solutions now that they have this business application. Okay, so now that I've digitized this trade document and I can recognize vessel names on it, and now I know that there's this guidance out there. How do I automate? How do I, embed this new information into level 2, into level 3, and ultimately a suspicious activity report if needed? So they're in varying degrees of what their level of sophistication is. Many are defining the risk. Others are onboarding new technologies and want to leverage that information. And then some are just, basically shopping around to see what the rest of the industry is going to do.
Excellent, thank you, Tim. So we're going to give our panel just a short break with the next question to the audience. If you move on to the next slide, you'll see the question on the screen. Question for the audience: which approach would you believe most improves banks' ability to monitor and identify their clients' illicit shipping and maritime sections evasion practices? Is it A, to adopt AI and automation to streamline compliance operations? Do you think it's B, hire compliance officers with maritime expertise? Or do you think it's C, arranging more training for compliance teams? We can open the poll right now and we'll give it a minute for everybody to answer. Okay, we'll give it just a couple more seconds. Okay, so you can see the results, excuse me, on your screen. So 59% of you believe that the best approach would be to adopt artificial intelligence and automation to streamline compliance operations. So that's very interesting. I'm going to ask the panel if there's anybody who wants to comment on the results, if there's anything that you want to address based on those results. Is anybody has any comments or anything?
Hey, Gilles. So I could start here. I think all three of these things are fundamentally important to improving banks' ability to monitor and identify illicit shipping practices. Probably the least important would be hiring compliance officers with maritime expertise, because in adopting AI and automation to streamline these processes, you're going to be using and leveraging the subject matter expertise of the vendor in which you are onboarding, who's going to help train the sanctions compliance team or the user of the tool. And that kind of speaks to C as well. Arranging more training for compliance teams. And the way that I look at this is, I'm in a global financial institution. We have teams that are scattered across the world that are conducting compliance checks. And the more training, the more visible that we are in the US providing sanctions training to them, it achieves almost the same goal. Obviously, adopting AI and automation, that is going to help streamline the process for efficiency, but training is where you're going to get the users who are evaluating the risk to where they need to be with understanding the risk.
Thank you so much, Eric. So as we move to the next slide and the next question, I'm going to stay with you, Eric, and ask you, is it fair, in your opinion, to assume that we have people from all lines of defenses, as we saw in the first poll, on the call here today? And I'm interested to know if you think that there's, is it fair to assume, first of all, that there's a difference in how first line of defense, second line of defense, third line of defense are, seeing those, seeing those guidelines? And if so, how do you make sure that everybody's aligned, everybody's streamlined on those new guidances?
Sure. So I think it's important to acknowledge that the role of someone in one LOD versus two LOD is fundamentally different. But while the role is different, the ultimate goal is the same, right? So when you're a client facing and you're trying to generate revenue, right, for the bank, your goal is to generate revenue. But at the end of the day, you're doing what you're doing for your financial institution or your institution as a whole. When you're talking about the compliance department, naturally, we are there to mitigate risk, identify and mitigate. So revenue generation and risk mitigation can come to a head. But what's important here is that when new regulations and new guidelines do come out, it's the compliance department's job to take those regulations, take those guidelines, understand them, and then disseminate that information to the business. What's also important to understand is that not all regulations or new regulations and all new guidelines are going to have business impact on your business. So, for example, if a country gets comprehensively sanctioned, but you do not do business in that country, then the impact will be low. Obviously, when the shipping advisories came out and we started to create more robust controls and implement policies and procedures around the shipping industry, it was important for compliance to have those conversations with the front, the middle, and the back office so that they have a fundamental understanding of the risk in their business. So when we had those conversations, it was exactly that. It was a conversation. It's not an adversarial or confrontational relationship. There is a culture of compliance at my institution where our business does not want to put our financial institution in a position where we could be possibly violating international sanctions. So, can you align them? Sure. Is it hard to align it? Not necessarily, because when you understand that the common goal is for, you're working towards the benefit of the bank, it makes it a lot easier of a conversation, and it also gives you credibility when the compliance department is talking to the business.
Thank you so much, Eric. Moving on to the next slide, I'm going to have a question for Una, which is pretty related to this one. It's how do you from your discussions with bank, how do you find the right balance between facilitating the income of new business and streamlining customer onboarding versus the need to ensure compliance?
It's a really interesting question, because as the regulatory requirements around trade finance have increased, we've actually seen a lot of banks stepping away from the trade finance space purely because the cost of compliance is becoming so high. So what's really been interesting is we have begun to see some banks who have become the key focus and providers of trade finance related products in the market. And in terms of their balance, they have dedicated, highly educated compliance teams who are working, burning the midnight oil, so to speak, to educate the organization and improve controls and efficiencies. How does that balance between new business and ensuring compliance? We do not want to be a business prevention unit. That is not the role of compliance. We're an advisory function there to support the business and to monitor compliance. Compliance does not own risk either. Risk is owned by the first line. That being said, the challenge, especially in sanctions, is it's such a specialist area that the compliance and the understanding of it really does sit within the second line to oversee and to manage. So whilst we can automate the controls, the challenge you have here is the review of any hits or alerts does become a manual process. And one of the comments that Tim made earlier about, there's a lot of technology out there in respect of, for example, scanning documentation to make it quicker and more easily readable. We've actually found in some instances that some of that technology, not Windward, but other technology in the market that provides those tools, it's actually become quicker to manually enter the data ourselves, because the translation of the documents by the system is not always correct. So this is what we can call a a challenge with new technology being implemented into our area. Obviously, some banks are increasing their business activities in trade finance because other banks are de-risking and exiting the area. So what we're going to see across the market is a more centralized number of banks that actually provide these products and these services, and within their compliance team, very technical departments who I'm hoping will be able to leverage off new and developing technology. The only challenge has been with the implementation of some of that technology. For example, in the scanning of documents, it hasn't necessarily been as successful as we would have hoped to start with, which would have obviously had an impact, not just with onboarding new clients, but just continuation of business relationships.
Excellent. Thank you very much, Una. So we'll move on to the next slide, where we have our final question for the audience, and then we'll have our final question for the panel. That's going to go for you, Tim. So, but for now, let's just ask our attendees, which of the following would you think is most effective in reducing the friction between first line of defense and second line of defense? Is it A, more reliable data, B, faster risk analysis, C, deeper knowledge and expertise, D, what friction you're talking about? And if you're D, you're very lucky. So go ahead and answer. We'll leave it open for about a minute. We'll give it a few more seconds. Okay, so we have the results on the screen. We have 55% saying that we need deeper knowledge and expertise. I think that makes sense. Anybody on the panel has any comments on that? I see that the second most popular answer was more reliable data, which also makes sense. And there's also a lucky 2% that are saying what frictions. So any thoughts on that?
I was going to quickly say there should be a box saying other. And I think one of the frictions is the historical legacy issue of the fact that the first line isn't necessarily absorbing. Eric put it beautifully earlier at SocGen. They have a really collaborative relationship with the first line, and in fact don't differentiate. They're all owners of risk, working as a collective. We don't necessarily see that across the industry, and that is one of the biggest drivers of friction, where the first line isn't necessarily absorbing their ownership of risk, or indeed developing that culture of compliance, which is necessary for us all to work harmoniously in the environment that we're in, given the regulation. So I would have put as other the one that, ownership of risk collectively and development of the compliance culture is key. And I know, Eric, you spoke about this the other day and you put it so eloquently, so maybe I pass it to you to talk about it further.
Yeah, sure. So, and also to the point of the polling question, see deeper knowledge and expertise, I also think speaks to what I was talking about the other day, in that, when us as compliance professionals, when we are subject matter experts, when we understand sanctions, when we understand new regulations, and we're able to have the conversations with our client-facing colleagues, and we're able to explain to them and disseminate this information to them, to the point where they understand it. Like these are sophisticated actors in the front, middle, and back office who are dealing with high risk trade finance products. So when we are able to, again, disseminate this information to them and show them that we are the subject matter experts, it gives us credibility, and credibility helps reduce friction, because when you're going into a conversation with somebody and you're credible, and they understand what you're saying, it helps reduce the temperature, it helps reduce frictions, and it creates a more collaborative type of environment.
If I may say, Eric, just on that, I think we discussed it the other day as well. that the importance of that is being able to talk in a way that the business understands what you're saying. And one of the biggest challenges, especially when we are very technically qualified, is there is a tendency to go in with that technical discussion. And the challenge you have in compliance is you can have 10 people in a room and you have to interpret what you're seeing in 10 different ways. So we talked the other day about emotional intelligence, which I suppose is slightly different than what we're talking about today in terms of shipping sanctions. But the challenge here is you need to interpret that complexity into a way that makes sense for the first line and the business facing individuals, which is in itself both an expertise and a challenge.
Yeah, the only thing I would add, and I'm so sorry to jump on, but there was so much good dialogue, and I wanted to contribute. But there's this that it's being able to speak specifically and give the front line something that they don't know. So there's a difference between sending something from front line to second line and second line saying, hey, I disagree with your judgment on this. According to our matrix, it should be categorized this, right? That's up for debate. And as Una mentioned, there's a lot of people to discuss it. But if second line comes back to first line and says, hey, we've conducted some research here. And here's some specific details of how it's out of compliance with deceptive shipping practices. Let's say this vessel has been spoofing its location for the past 24 hours. That's specific, it's new, and it's not necessarily up for debate. It's quantifiable. So being able to bring that utility to the front line is something that the front line appreciates, and you quickly get consensus, where otherwise it can turn into a mess.
Great, thank you to all three of you for this conversation and these comments. Tim, we're going to stay with you for the last question, which is basically, we recapped our 2020 analysis of maritime risks, and everybody can see the results, or the results of the analysis on the slide here. I was wondering if you have any insights that you wanted to share, and what do those insights mean to the banking industry?
Yeah. Okay. So there's a lot of numbers here. A lot of the numbers are high in some, so and Eric had mentioned it before, is that if you're interacting with international trade, you're interacting with this type of risk. So when we're talking about 115 or so thousand vessels out there that are transporting around 90% of the world trade, there's a lot of noise out there. I think I don't know whether my screen's mirrored, but on the right-hand side, you're going to see the events, right? Port calls, signal loss, ship to ship. That's basically describing that there's a lot of noise to sort through. So you're going to need some sort of technology to eliminate most of that noise. And then when you look on the left side of this slide here, you're seeing that, okay, there's in change here. When I take a risk-based approach, calculate my project settings, I got around 5,500 vessels or so that I should really be concerned about, and it's connected to around 6,000 companies. Now, some people on the call might be listening in and saying, well, that's really not that much. Bear in mind, they're responsible for 90% of global trade. Some of them might be thinking it's a large number. The point is it's finite, right? That's the most important piece of this. It's a finite number. It can be detected, and you can take a proactive approach like Societe Generale has, and the banks has been working with. And it's just, we're at a point where we can start applying some business applications here. It sounds complicated. Sometimes I think the government makes it sound complicated deliberately, but there are practical ways to get your hands on it, and the statistics bear it out. But again, it's finite. There's a box around this that we can get our hands on.
Yeah, thank you, Tim. And if I can just add to that on about the the stats that you can see on the right hand, you can see that, like Tim said, there's so much noise out there, but you can see the numbers. The numbers on the left are actually very, very high. But when you look at the percentages of those that are actually potentially related to deceptive shipping practices, you can see the percentages are extremely low. So the main objective is to really identify those that are really threatening and those that should be flagged as high risk. So that's part of what Windward is doing. So thank you to everybody. At this stage, we're not finished yet. We want to take some questions from the chat. But before we go to the questions in the chat, I just want to recap a little bit what we talked about, and we can move on to the next slide and quickly recap what we talked about so far. We basically talked about, and you'll be able to see it on the next. I'm not sure if my connection is slow, if we move yet to the next slide, but yeah, there you go. So basically what we talked about is to get the importance of getting acquainted with the new guidances and what deceptive shipping practices are. You really got to know what those are, because they have a lot of importance to banks. We also talked about the first line of defense, second line of defense, and how they take those differently. What the differences are between those two lines of defense and how they adopt those guidances. We also talked about the importance of aligning them and streamline the operations as a key to having better operations, better compliance operations. And lastly, we made it we were very careful not to have this webinar about Windward, but we did mention the role of Maritime AI and the impact it has had on banks specifically, especially after the release of the OFAC guidances and the deceptive shipping practices. So with that, I'd like to move on to the questions from the chat, and I think we might have answered the questions that were there. If there are any questions, you're more than welcome to type them in now. I think Una mentioned, kind of answered the first question, which is, are we going to address structures of non-bank financial institutions? I think we touched on that point, but I don't know if anybody has anything that you want to add to that. If not, that's also perfect.
I think if I may just on that, we're going to see a lot of noise with regards to potentially non-financial institutions, in my opinion, with regards to FATF and potential grey listings. UAE is a perfect example at the moment, a country with the best intentions, setting up a good, clear AML framework, good education, good support for the industry, and obviously experiencing challenges specifically in the trade area as well. So, that is just going to be one example of many that potentially will come up over the coming months. So I think we should just keep an eye on that. What we can do, both as banks and as non-banks within the various sectors, is to really encourage public-private partnerships to help the government and regulatory entities to understand what our challenges are in compliance and implementation of the controls. And as Tim rightly pointed out earlier, we should make this as simple as possible. And I always like to say compliance isn't rocket science, but unfortunately, when it comes to sanctions, they're so broad and open to interpretation that there is unfortunately room, I wouldn't say for error, but for organizations to take an approach which may not necessarily be aligned to the intention of the enforcement body issuing the sanction requirements. So there's a lot of work to be done here, public-private partnerships in different sectors coming together to discuss the challenges they're facing. And the problem in the sanction space is a unanimous problem. It's not specific to financial institutions. So again, a lot of positive work needs to be done by organizations coming together.
Thanks very much, Una. I think I'll being mindful of time, I just want to turn it to all three of you. If you have any final comments or things that you wanted to mention before we close this webinar off, that's the time. Whoever wants to speak first, if there's anybody.
So just a couple of final thoughts on my end. From a financial institutions perspective, as this is a maritime risk and trade finance webinar, if you are a financial institution, it's important to conduct an impact analysis to see, do you have exposure to the maritime industry? That's number one. The other piece of this is making sure that your compliance department and your first line are aligned in the approach to sanctions compliance. Make sure that there's a fundamental understanding of what sanctions means, what it means for their business, and what it means for onboarding new clients or facilitating new business. Having these open lines of communication are going to be fundamental to making sure that the relationship stays a positive one, And knowing that you guys are working together, it's going to eventually help facilitate that new business while mitigating your sanctions exposure.
Thank you so much, Eric. Okay, so I think, sorry, Una, go ahead.
So my only comment was going to be in the back of what Tim said in respect of the systems. I would encourage organizations to have their sanction systems independently tested, run scenarios to understand whether it's working in respect of the logic you anticipated it to. And I think we're going to see an increasing focus on that from regulators as well. So just be conscious, if you haven't performed that exercise to date, you know, there are specialist providers in the market that can help you, such as AML Analytics, for example, just to name one. So that's something that we've seen happening, and we would actually encourage that as well, to give you confidence that your systems are performing as you would expect them to.
Yeah, and on that, I would mention also that, you know, financial institutions don't have to be maritime experts. You know, but that's part of what I'm doing. You know, with Eric and I, we have great partnership, and off the heels of that partnership, I saw in the chat there was, you know, people are curious as to where these numbers are coming from, the sources. You know, artificial intelligence and data scientists are calculating these out. So that was a lot of the numbers that you saw were a trend analysis of what, how risk was calculated over time for the system. And so what you're seeing in front of you is not something that you're going to read about in the news, but it's something that a data scientist can extract using artificial intelligence. And those are the insights that we're looking at. So don't get overwhelmed with the regulation. Don't get overwhelmed with a whole new domain of knowledge. There's expertise out there that are more than willing to help. If anyone wants to reach out to me, certainly happy to help. And you know, but as to answer the questions in the chat, a lot of that number came from the artificial intelligence insights calculated over the year of 2021. In contrast to the website I had talked about before, which is simply just going on OFAC's website and looking at whether or not they're on a list. So I think I covered where most of my sources came from, but happy to follow conversations on LinkedIn or whatever if someone wants to know a little bit more about where this info is coming from.
Yeah, absolutely. I think you can find everybody that's on the panel here today on LinkedIn. So feel free to reach out if you have any additional questions or you want to learn more about anything that's been discussed today. I want to thank our panel. You know, a big thank you to all three of you. Thank you very much, Una, Eric, Tim. It's been a real pleasure. Thanks again to ACSS for hosting us today. And I'll turn it, and thanks everybody, of course, who attended. I'll turn it over back to Alex.
Thanks. This concludes our webinar today. Thanks a lot, guys. I would just like to extend a big thanks to all of our speakers and Gilles for moderating this session, and to Windward and everybody who was involved or organizing this webinar today. Thank you so much. I would be grateful if you could just stay with us for a little announcement on the next webinars. If you could go back, one slide back. The next two webinars on the 20th of January and the 27th of January are free for ACSS members, and another one on the 3rd of February, which is sponsored, will be free for everybody. And next week, we will discuss the 2022 US sanctions and export controls outlook, which is organized by our Government Relations Task Force. And on the 27th of January, we will look at the ITA and EAR enforcement actions from 2021 and discuss what we have learned from these enforcement actions and settlement cases. So please join us for our next webinars, as always on Thursdays, usually at 12 p.m. Thanks for joining us today. And that's it also from me. Thank you, everybody. Have a good day, night, or morning to wherever you are, and see you next time.
Thank you.
Thanks, guys. All the best.
Bye.